Let's have a general overview of the market before we drill down into individual stocks. Where are we? Are we cheap? Are we at full value on the local market? We're just above that 25,000 point level on the JSE All Share.
Bronwyn, that's a great question. If you take a look at the market at the moment, it's trading on a PE of about 14.5 times. And if you have a look at the history, the average PE on the market is about 13.1, 13.2. So on that basis, you would say the market is pretty expensive. But if you have a look at that 14.5 PE, that's been driven by obviously two factors. Firstly, the massive surge we've had in prices in the market, certainly from the low in March, as you say, up to the current level of 25,000. But equally important, we've had a collapse in earnings the last year. Earnings have gone down across the board 25 to 35%, and even in the resource companies even higher. So you've had an escalating price and a decreasing earnings. So your PE is at 14.5. So what we would typically rather look at is the Graham and Dodd PE, which strips out sort of the 1 year noise and rather takes in at least a longer period of earnings, at least 5 to 7 years. Now, if you calculate the Graham and Dodd PE for the market at the moment, it's trading at about 14.4, 14.3, but
which is not very different from the 14.5.
But the key point is the long-term average on a Graham and Dodd for the market is 16.6. So we modestly below the market.
Below the long-term average.
Below the long-term Graham and Dodd average for the market. So there is still some value in the market, but obviously not as great as it was when the market was at 8.5.
Well, that comes perfectly then to my next question. Where is the value in the market lying at the moment?
We still see some value in the industrials and certainly in the financials. The financial side, the banks have obviously they had a huge whack last year and are still catching up, but there is still some value. The banks are trading at very low price to book multiples, which for a bank is quite key. Typically in the good days they were trading in excess of 2, 2.5, and now they're below 2. So there is still some value in banks. Within the life assurers, there's also still some value. We've spoken about Old Mutual before. There's still value in Mutual and certainly in Metropolitan. And on the industrial side, there is still some value. We are seeing some value across the board.
Old Mutual, what's your target price on the stock at the moment? Today we closed at 12 Rand and 11 cents, up 1 2/3%.
Well, if you look at Old Mutual, typically at the moment, I stand to be correct, the embedded value is about 17, 18 Rand. So it's still
a big discount to embedded value.
It's still a big discount. Remember when I was at 4.50, so
which is when you should have been buying Old Mutual.
When you should have been buying Old Mutual, definitely. So there's still some upside. Old Mutual is a type of business with the franchise, the management, the products and the geographical reach, that it should be trading at a premium to embedded value. Obviously, it's understandable, why it's trading below that, but that's not to say it should mean revert and go back to its normal history.
Let's drill down further into the industrial sector, looking at Datacentrix. Came out with results yesterday. Headline earnings per share flat. They've got a lot of cash on the balance sheet. They are paying a dividend. In fact, some shareholders saying, why wasn't that dividend increased substantially?
Yeah, those are all the points that I was going to mention. Maybe you should be sitting here and I should be interviewing you. That's right. Datacentrix got a very low debt to equity ratio, high cash. Their earnings were flat, which some people would argue, and I would argue that that's actually very, very good in this environment for a technology business where we've seen businesses being hit by the recession and corporates not spending on IT. So I think that's very commendable. And as you say, they're paying a dividend in these tough times. And if you normalize that, well, if you say that dividend for the full year, it equates to almost a dividend yield of 7.1%. and the PE of 7. So a company that dividend yield is trading higher than a PE definitely offers value.
Their weakness, of course, is their government sector work, and that is with probably across the board with governments, with companies that are dealing with government work at the moment. With the change in leadership that we've seen, suddenly deals are being delayed. We are seeing longer lead times. So that is set to recover. That perhaps also a positive for Datacentrix going forward.
Sure, and the key point there is the lead times. Tender processing's now are taking longer, and as you say, I think there is a greater emphasis now on the tenders and getting all your ducks in a row. So you would expect the sales to be longer, but as you say, once the recovery comes through, this is one business that will benefit from that.
Datacentrix versus Datatec?
Sure. Datatec's also got
if you're wanting IT exposure, that is.
I would advocate you could take both. Datatec has run quite hard over the last couple of months. In fact, this year, I think it's almost up 50-odd%.
At 28 Rand.
At 28 Rand.
And up strongly today, more than 4% higher.
Yeah, and that's on the back of the results are coming out. So the interim results are coming out next week. I believe it's Tuesday. So we certainly expect earnings in that business to be down on the comparative period, which is understandable given the global recession. But what I like about Datatec, it's that adaptability to the environment. The business model is structured in such a way that as soon as this rebound in the economy happens, they're elastic in that they can take advantage of the increased spend in IT. And also, last week they announced a nice little acquisition in their Westcon subsidiary in New Zealand. So they're looking to, Asia Pacific is one of their growth areas, and they're looking to grow on the back of that small acquisition. So, the Datatec is an IT business that you look through the cycle, and as you mentioned with Datacentrix, it's got a great amount of cash on their balance sheet, so a very strong balance sheet at the moment.